Hello and welcome. It is Saturday, March the 28th. I am Martin Straith from the Trend Letter, and I thought we'd do a bit of a recap of what's been happening in the market this week. It's been a pretty busy week. So, first of all, we had last Saturday, I'm sure everybody remembers, we had Saturday night, Trump gave his ultimatum that they would threaten to obliterate Iran's power plants if the Strait wasn't open within 48 hours. And then on Monday morning, we had the first extension of that ultimatum, where he basically gave them 5 extra days to get that straight open, or he would obliterate their power plants. And when that happened, Monday morning, basically oil crashed. It was down, I think, 10 to between 10 and 14%. And so, Trump talked it down. Then on Thursday, we had the news that the Pentagon was planning to do a ground invasion to take over the Kharg island, which is the main energy hub there in Iran. And then Thursday evening, Trump made yet another one of his extensions. This time he told them he's going to give Iran an extra 10 days because he said Iran was just begging for a resolution here, and he thought everything was going to be great. Now, the point is here, though, that on Friday morning, obviously Trump was expecting that comment would, bring oil prices down because again, he needs oil down. He needs gasoline prices down. He needs diesel prices down because in the U.S., people are starting to complain. You've got inflation rising all over the world, and he's got a midterm elections coming up. And right now, his approval rating is, I think it's one of the lowest for a president. So, so there you have that. And then here we are on Saturday morning. The Houthi group now, they've launched missiles into Israel, so they've joined the fight. And now we've got Iran threatening that they're going to close the Red Sea as well. So they've got control of the Strait of Hormuz. They're talking about controlling the Red Sea, and we got the Houthi, bombing Israel. So interesting things happening. Now, I want to take a quick look at what that Monday looked like when Trump made his, extension. So very interesting things that happened. So Trump made his announcement at 7:04 a.m. But before that, about 10 minutes, 15 minutes before that, during the pre-market, we saw a major oil futures sold for about 580 between $760 million, 6,200 contracts shorting oil. And this is in normally a very quiet time for the markets. And we had this massive short position put on. And then, about 10 minutes later, we had another massive position, this time a long position on the S&P 500. So here we had a massive, short oil and long the stock market, minutes before Trump made his announcement. Certainly suggesting there's some insider trading going on. Being a friend of Trump's obviously seems to work pretty good. So once we had that, we had the crash. Oil went down all the way down to $85. And like I say, a total down about almost 14%. So, and the profit, according to Gemini, we're looking at about a $75 million profit in a very short period of time. And this is what it looked like. Very calm, nothing really happening. And then boom, 5 to 10 minutes before Trump made his announcement, the market just plunged. This is the oil price. Oil price plunged from, about $100 down to like about 85. And that was, like I say, a 14% drop, $75 million profit for somebody who happened to be the friend of the president. So now let's take a look at oil. So oil, before the war, we had a bit of a rally. We had actually targeted a $72 kind of target, which we hit. And then, of course, the war broke out. And that spiked oil all the way up to $120. But then it just kind of, Trump talked it down. So, he said the war, this can be easy peasy. The war will be over soon. And then the market started to rise up again because we're seeing a lot of bombs going off, a lot of things happening. And then again, Trump talked it down over here. and then the market sort of went sideways for a while, and then this was last Monday where he did his, his extension again, and then we had during the week. And then like this was Thursday. On a Thursday, again, that was when the market was worried about the on the ground military action. And then, of course, yesterday on Friday, uh, Trump made this announcement Thursday night that he's extending. He was expecting oil to go down, and it did not. The market basically said bullshit to Trump. So now it's going to be very interesting to see what happens the rest of this weekend. You've got to think that Trump's getting pretty motivated to try and get something done, some kind of an agreement happening. So we'll see. But what we're seeing here is whenever the market comes up to this level right around here, so just over $100, that's when he's been, getting on the thing saying, "Hey, we can do something here," and we'll see what happens. But if the Strait of Hormuz does not open, if the Red Sea also now gets blocked, and if the other groups start getting involved, and we actually are seeing escalation, we very likely are going to see oil move higher. So we'll have to just see how things all work out. Um, Now, if we look at what happened with the stock market, the S&P 500. So again, we've been showing this for the last number of videos here. Since COVID, we drew a support line all the way through all these support levels, including Liberation Day. And then we just basically extended that up, and that gave us a parallel channel. And you can see that this is in a very solid bullish channel. Yes, we have, we got the resistance up here as the markets rally. And then when they sell off, these support levels have been holding. And that's really positive because, I mean, you're going to have corrections in the market. And as long as you got the general trend is still up, then that's a very positive move. So again, we had from this rally, we went up to here. Then, of course, that one died as Trump did his tariffs on Liberation Day. And then we drew another support line here up to these support levels and right through to the top. And then, of course, we had back on January the 28th, we had the market top here. And went from that point on, basically the market just rolled over and it just on and on and on it went. So that's what we've been seeing here recently. So now if we look ahead, we can see that we plunged through the first support level, which was this level right here at about 67.20. Then our next key level was support from here and here, so a very strong level. It did bounce off here for a bit because we were expecting a bit of a rally, didn't get much of one. And then since then, the last couple of days, we've just tumbled back down. So now we can see that, again, if the escalation doesn't calm down, we're probably going to continue to head down here. But if they do some negotiation and they get some legitimate action where Iran and the U.S. both say they're talking, they both say they're making progress, then you could maybe get a rally here. Otherwise, we're going to go down to this level, and so we're down talking about 62.30, and should be some very strong support. We should get, if we get down to here, we should certainly start to see some rallies from that point. If we come down here, we should start to get a bit of a rally for sure. We may test this level a couple times, but if it drops down, well, then that would be pretty serious because that's really telling you that a key level here would be broken. Now, if that were to hit this level, you can see that that's halfway in this parallel channel, so that would be the halfway mark. But if it holds here, that's fine. But if it breaks here, I mean, we still could trace all the way down to 5,400. Again, if oil prices stay high, if every day that it doesn't open, that's just more pain for the world economy, and it's more pain for the U.S., and it's going to be more pain for Trump. So there's the S&P. If we look at gold, we'll take a look at the metals here. So with gold, we've been looking at this for a while. Had this nice rally up to here. It stopped for a while, and then we got here, and then of course we just had this parabolic final burst at the end. And what we've always been saying about parabolic rallies, they're great if you're in them, but you don't want to be the last one in because what happens is the fall down, the drop is as pretty much as dramatic as the rally up. And that's exactly what we had. 2 days we saw from about 5,600 it went all the way down to about 4,400. So dramatic fall. Then it kind of rallied sideways. It tried to test this resistance level again, couldn't do it. Tried again, but failed. And then we started to have, another feeble attempt for a rally. And then ever since, like March 11th, we've been just tracking down and down. This we called for some strong support here. Gold rallied pretty nicely yesterday on Friday. So we would expect to see a bit of a nice rally here. If we don't, you know, we're going to break through and we're going to drop down and very likely head down to about the 3,900 level, somewhere in there. So, we're looking at that these are key levels. Here, we want to draw that one in. So you're looking at about 3,900 would be the next major support level for gold. Now, lots of people go, well, why is gold not rallying here? Is it supposed to be a safe haven play? And yet, during the war, we're basically seeing gold sell off. And one of the main reasons is we've got, with the oil prices high, that's inflationary. So that means that everybody was expecting that the Fed was going to cut rates as soon as the new chair came in. Well, if you got inflation racking up, you got oil prices high, that means inflation goes up, and that means that the Fed is not going to cut. So they're not going to be able to cut. So that's a big hit for gold. And if inflation rises, then you're also looking at the bond market going to go up. So, I mean, if we look at the other key area, if we look at currencies, look at the US dollar. Well, gold's priced in the US dollar, and so are most commodities. So if the US dollar goes up, which it's doing, that means that these other commodities they're going to go down. So the US dollar right now is testing a resistance level, been pretty strong resistance level right around the 100 mark. If this escalation continues, we see oil prices continue to rise, and we're going to see more of the conflict. That's going to be more money going into the safe haven of the U.S. dollar. If the U.S. dollar breaks through here, and again, if the Strait of Hormuz stays closed, we could see it definitely start to push up, and I can see us, see the U.S. dollar get into 102, 104 area. So keep an eye on that. Another thing you want to be aware of is one of the reasons that gold has gone down is because people they've been buying it, and then when you got a gold so high that people start taking some profit. But also one of the big factors for gold have been is that the central bankers have been big buyers, and you got a country like Turkey. So Turkey has been one of the biggest buyers of gold as a central bank. But Turkey, the other thing you have to understand is Turkey it relies on about 95% imports for its energy. So we've got right now, I mean, energy is expensive. So their oil and natural gas prices are skyrocketing. And that's not good news for Turkey. But to compound that, here's the Turkish lira. This is Turkish lira in US dollars. Look at that. It's just tumbling down. So that just magnifies the problem where they've got, the price of Brent crude is it went up to $117. Well, if their currency, again, the crude is priced in US dollars, well, their lira to US dollars is dropping and dropping. So one of the strategies would be if you're a central bank, you've got all this gold, sell some of the gold, buy back your liras and start boosting your currency so that the people in your country don't feel such dramatic pain on the inflationary end. All right, so that's everything. I always say everything's connected, and this certainly is as well. So again, back to gold. We know that gold is been trending down again. We people who had that big profits in here, and then they got the worry there. So when it got up here, a lot of people started to sell it. We've been selling all the way up in our with our subscribers. We sold again last week or two. So you've got to take profits when you get them. We're going to have another really good buying opportunity with gold. So just understand that if you miss those trades, don't be scared. Now, if you don't have any gold at all, it wouldn't be a terrible thing to start buying here. You could buy a little bit, dollar cost average, but understand it's probably going to drop down to here, but you might get a nice rally here. And if it does continue to shoot up, well, at least you got some in here. But don't go all in. Have a plan to buy some more down here if we get a nice, correction even further. If we look at silver, we've been showing this trade chart a while. So silver right now, again, had that parabolic move higher. Again, we were warning, do not be the last ones in. The poor people that were the last ones in, spiked that next day, and then it just tumbled. And silver lost between 40 and 45% in 2 days. I mean, that's wild. So then it just started trading sideways. It did test this 92 resistance twice, even popped through intraday, but it closed the day down. Then it closed down, and now we've been just like gold. It's been falling and falling and falling. So again, with silver, we should get a bounce here. We'd be looking for a bit of a rally there, and if we get it, we could get a nice rally going up here. I don't think we're going to get up to 92. And again, depending what happens in the Middle East, I think we're probably going to test this again, and then I think we're just going to drop. And if it does drop, it's going to drop pretty dramatically, I think. So if you look at down here, your next major support would be at the $52 level. And that's really where this really parabolic move really started. We could retrace all the way back to there. As investors, that would be fantastic for us. This would be a great buying opportunity for silver. Let's take a look at Bitcoin. Why don't we take a look at that? Now, Bitcoin, we've been highlighting, it was in a parallel up channel again, a nice uptrend channel. It started, it was got up here, it retraced, tested the low, tested the high a couple times, again, retraced, but, a higher low, higher high. Again, up here, higher high again, higher low. But just yesterday on Friday, it broke through that. We've broken out of that parallel channel. Today, we're getting a little bit of a rally here. But if it doesn't close above this parallel channel or get into the parallel channel, then it's starting to look pretty bearish. Initial support for Bitcoin right now would be about $60,000, of course. All right. I think we'll end it here. Just wanted to give you a quick update. As always, stay alert, keep your head up, and do enjoy the rest of the weekend. Take care.